How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is episode 43 to the Asian Session Library. Once again, with the US dollar versus Japanese yen, we had a successful Asian Session model on Thursday night, the 7th, March 2024. Let's walk through it together. So 12 p.m. to 8 p.m., we get it. It's a dead zone. We're not going to look to trade there, but we are going to utilize the sell side liquidities below lows or swing lows, or buy side liquidity above highs or swing highs as our liquidity pools to frame an Asian session model idea. So let's take a look. So we have all our swing highs marked off, and that's going to represent our buy stops. So if price were to run up and take out any level of buy stops, I would look for a shorting opportunity. If price were to take out any level of sell stops, I would look for a buying opportunity. So you have the opening price. That's 8 p.m. We'll leave it as Asian open. Anything above this is a premium. Anything below this price point is a discount. So we have a way to figure out where overbought and oversold conditions are without any indicators. When we play it forward, you're going to see price run buy side liquidity. And we're being above the Asian open, so we're in a premium, we're overbought. This is where greater odds of sell conditions will more likely unfold, especially if it's going to be in a bearish trend. So if the higher time frame is also telling you that market's going to go lower, this could be an intraday Asian session trade that will follow the trend. So we go down to the 1 minute time frame, and we're looking for a fair value gap that runs a swing low, and the fair value gap is inside. So you can see it's right there. So you can see we break multiple levels of buy side liquidity, but the entry forms there. We're just stalking and waiting for the entry. It doesn't matter how many levels it takes out. It could take out one level and then produce the entry. It could take out two. It could take out three. It could take out all of them and then produce the entry. But we're just stalking the setup. As soon as it raids the first buy side liquidity pool on the 15-minute time frame, start looking at the 1 minute for this entry technique, because it could form very fast without you realizing it. There we are. We would go short a one-to-one scenario. So you can see price trades right back into that range. 15 pips, 15 pips, and that's it. It's blending in with the changes to blue. So that's the fair value gap. That's the swing low. That's the entry. We're selling where? In a premium, an overbought condition, overbought territory. Played out. You can see we get 15 pips, 10 pips right away. So quick and very successful Asian session model that night. Sometimes it happens very early in the session. You can see now other examples, you can see it's happening at the end and going into the next day. Sometimes it happens really quick. That's why you got to be there. You got to be on time. And if we play it through, let's say we took partials and we moved back to break even, we would have been stopped out. We can see that. But let's say we didn't move our stop loss. This is something I talked about when I was filling out the Asian session sheet, right? So I have a documentation of the tracking. So we got January, we got February, and then we got March. So we're calculating that. And Thursday was one where it continued running without actually coming back and hitting its stop loss. So you play it forward. You can see it sold into NFP. That one model sold into NFP, but it realized the higher time frame trend was going lower thus far into March. And it gave the setup way before NFP to go short during the Asian session. Not London or New York. And we talked about that too. But we could see during the Asian session, it gave us a feasible setup to potentially catch more than what we were looking for. So currently, this is about it. Price would be up 156 pips max, I believe, unless it drops lower. Yep, in this Asian session, ran higher. So that was an unsuccessful one. So Monday it showed the pattern, but the entry formed and it never gave it to us. So I'll give a little bonus for this video. So this was yesterday's or last night's Asian session, because today's Tuesday. You can see the entry technique forms here. Goes to swing high. There goes the fair value gap. Price never trades back down into it. So notice the entry does form in a discount below Asian Open, and then it runs higher. The price continues to run higher, taking out all the buy stops. We try to look for a selling opportunity. It failed on us, which is okay. And price continued to trade higher. But if you look at the framework of what it looks like using a bar, we can see it opens, drops low, creates a really well rebalanced price range, and gets ready to head into longs. And it happens very quick and dynamically. Doesn't waste any time. About around like 223. Actually, when the entry formed, that's pretty much where the market just took off. That was the last point of reference. The market just continued to trend higher. And there's nothing you can do about that unless you use a different entry technique, of course. You can use other ways to get into long. But if you're someone that's very simple like me, you stick to one entry technique every single day. You repeat that pattern every single day. You see it, you take it. You see it, you take it. There's no emotion, win or lose, because you know it's consistent enough and it frequently happens. So you're really secured in the model. And if you don't get the entry, then it's okay. No entry is no risk to your equity. That's also a winning day. Some people don't look at that as a winning day. I do. But it opens, gets people short, and then it runs. Range expansion. All this going up here is range expansion. Every candle is looking to do that. Every session is looking to do that. It's looking for a range expansion. The monthly chart, there's a range expansion. It opens, and then it ranges all the way down. That's its range expansion. Or it opens, and it ranges all the way up. That's its range expansion. But if we were to go right before the range expansion, there probably was a Judas swing or fake move. There goes the fake move. We got you guys to go short, but then we pull it back up long, right? And then we close off here, and we're done. So hopefully this was insightful. As you can see, Thursday was successful, but this Monday was not, and we wouldn't have talked about it, but we talk about it all the time in the Telegram channel. So if you want to be a part of the Telegram channel, just ask me for the link. I'll send it to you. I made the Telegram channel private because I really want to weed out people that aren't really serious about trading and those that are actually looking to advance themselves in their career and get the knowledge, and be around like-minded individuals. Peace.